Hi guys, and welcome back to my channel. I think that we can all agree that these past few months have been extremely difficult. In the midst of a pandemic, it's understandable that the economy will take a hit, leading to a loss of jobs worldwide. And if you're like me, you are one of millions of people who have lost their jobs due to COVID-19. And as extremely difficult as that is to endure, you will rise above this and you will be okay. So even during the midst of a pandemic, it appears that CERB recipients have extra cash to put to work, as there has been over 500,000 new trading accounts that have been opened since the start of isolation. So I can't speak for everyone, but if you are someone who is receiving CERB and has excess funds that you are ready to put to work for you, please keep watching because this video is for you guys. Even though the Canada Emergency Response Benefit, also known as CERB, is a program initiated by the federal government to provide temporary income support to workers who have lost their livelihood as a result of the COVID-19 pandemic, the CERB provide individuals with $500 per week for a maximum of 24 weeks. It has recently been announced that CERB has now been extended for another 8 weeks, that is available from March 15, 2020 to October 3rd, 2020. So since CERB is meant to be temporary in order to help people pay their rent, mortgages, buy groceries, and cover other essential bills, it will soon be coming to an end. So I would say if after meeting all your basic expenses, if there is money left over from your CERB payments, it would be a good idea to invest this money for your long-term financial health rather than having it sit in the bank collecting very minimal interest. As I said before, and I will say it again, invest, don't gamble with these extra funds, which is likely what a lot of beginner CERB investors have been guilty of doing recently. Speculating your CERB money on penny stocks or trying to time the market can be a very dangerous game, especially for first-time investors entering the market. The thought of making huge gains in a matter of hours or days by day trading or swing trading can lead to very unfavorable results. The markets have been very volatile and recently have been swinging to the upside, so it's easy to think the market will continue to be going up off the lows back on March 23rd. But it doesn't work that way. It's very difficult to make money in the market over the short term due to the unpredictable nature of short-term market fluctuations. If you're going to invest your CERB money, please invest it and don't gamble with it. Invest it for the long term and have a time horizon of at least a few years, not hours, not days, and this way you'll be able to grow your portfolio without risking all your money. The goal is to replace your CERB payments with income-generating stocks that will replace your CERB payments over the long term. One of the easiest ways to build a passive income stream is through solid dividend stocks. While there are many Canadian companies that pay dividends, you need to identify stocks that have strong balance sheets and cash flows and has a history of increasing dividends. I will be providing you with a list of Canadian stocks for your consideration that meet the criteria of increasing and stable dividends. Canadian banks have underperformed the broader markets because of the challenges of the COVID-19 pandemic. However, the share stock price pullback has also increased dividend yields to attractive levels and presented an opportunity to purchase solid companies at a fair valuation. Here are Canada's top banks with their respective dividend yields and dividend payouts that present a good buying opportunity for both stable and increased dividends and capital appreciation in the long term. Another sector that has seen their share price come under pressure is pipelines. Again, the stocks below provide generous dividend yields and future capital appreciation. The utilities sector provides essential services and are considered defensive stocks. Capital appreciation is not as great, however, they provide a steady and predictable income stream. Their dividend yields have come down in recent quarters, and investors have bid up their stock prices looking for safety. People cannot do without their cell phones, and as such, the telecom sector provides a steady and predictable income stream, as well with the potential for capital appreciation in the future. And for individuals that want a monthly cash flow, I would recommend looking at BMO Canadian High Dividend Covered Call ETF, ticker symbol ZWC. This ETF owns long positions across a wide range of TSX dividend-paying stocks. Unlike the TSX index, the ZWC is better diversified, providing exposure to more than just financials, energy, and materials. Here's the ZWC sector exposure breakdown. So there's 31% financials, 22% energy, so mainly pipelines, 16% communication services, so telecoms, 8% consumer cyclicals, 8% utilities, and 16% other sectors. As of this video, the ETF provides a current yield of 8.4% and a monthly payout of 0.11 cents per unit. As mentioned earlier, the $2,000 per month CERB payment is temporary, but the passive income you can generate from your dividend portfolio will last a lifetime. Happy investing, guys. That's it for today, guys. If you guys liked my video, please don't forget to hit that like button. And if you have any questions whatsoever on what I covered today, please don't hesitate to leave a comment below. And if you haven't already, please subscribe to my channel. Until next time, guys. Bye.